Welcome back. We are waiting on the July jobs report this morning. It is out in about an hour, just over an hour. It's expected to show 183,000 jobs were added to the economy in July. The unemployment rate is expected to move lower to 4.3%. Joining us right now is CapitalistPig.com founder and Fox News contributor Jonathan Hoenig. Jonathan, good to see you.
Great to be with you, Maria. Good morning.
So characterize the jobs market. What are you expecting today?
I expect it to be good. I expect it to be a beat, and it's largely because of what the stock market's been doing. I mean, Maria, it's with the all-time highs in the Dow and the Nasdaq and so many of the tech leaders. It's become like Groundhog Day. Day after day, we see this exploding stock. It's a good thing to have a stock market higher. That tends to be a great forward-looking indicator for jobs. We've always talked about that. The market precedes the jobs numbers. So despite the fact they're up near, 16-year record lows in terms of unemployment, I expect to see the unemployment number even lower, probably as low as 4.3%, and perhaps even a beat, 180,000 plus jobs come 8:30 Eastern.
Jonathan, Jack Otter here from Barron's. Of course, everyone is looking at wages, wondering if we can get those numbers to tick up a little bit. That has interesting implications, not only for people's paychecks, but also what's going to happen with inflation and therefore Fed action. What's your view? Where do you see wage hikes going?
Well, the Fed has it wrong. That, Jack, I can promise you. I don't know what the wage number is going to be, but the Fed is central planning come to interest rates. They're always wrong. Central planning has to be wrong. So that's my fear, is that by the time the Fed gets around to actually finally seeing there's some inflation in the pipeline, they'll be what's called, of course, behind the curve and way too late. Now, we haven't seen that just yet, but what often happens with the bond market is that the music stops and the bottom falls out. Could happen this morning at 8:30 after the number. Could happen in response to something the president says or tweets. Sometimes the music stops. I just don't think it stops yet.
Jonathan, you don't believe that the market's going to react to a presidential tweet at this point. I mean, that's what, again, the markets are very good at kind of factoring in information, and the information is that the president's unpredictable when it comes to that, and I think it matters so little to the markets, if anything at all.
Well, Dagan, keep in mind, I mean, it was early in the president's presidency, and even during the campaign, he would talk about a particular stock and move that stock based on his talk about, trade or perhaps wages and whatnot at that particular company. So the president can move the market, but I have to agree with you. I mean, there was a time the market moved based on the coded color threat assessment from the administration in terms of terror warning. We don't see that anymore, and we don't see direct reactions to the president. But with so many bubbling hotspots around the world, whether it's in North Korea, whether it's in the Middle East, or even here at home, at some point the market's going to take a look at that Twitter feed and say, get me out.
So what about the markets, though? I mean, in terms of valuations, are you recommending investors put new money to work here?
I think you want to avoid, Maria, more than anything, the all-or-none decision. I don't think we're at the top of the market. Market's at an all-time high. Trends tend to persist. But what ends up happening is at the top, everyone gets super bullish, goes all in. So I think now's the time more than anything to be selective. And, take a look at the weakness, for example, in oil stocks and energy across the board, even in real estate. And, this isn't a market where you simply can't buy anything and hope for the best. I, ironically, am actually looking at a lot of green energy plays, some of the yield co's. These are actually like master limited partnerships for green assets. They've been doing quite well right now. But I think gone are the days you can simply buy Apple, buy Amazon, and expect to get your 12 or 15%, especially this long in to a sustained bull market.
More talk about energy. Phil Orlando is recommending energy. You're recommending energy at Barron's as well. Hey, we want to talk to you about the return of the trading mainstay in Chicago, the Open Outcry Pit. A new Open Outcry trading floor on the way, first to be approved in decades. Is this a good move? What's your take on electronic versus right there, Open Outcry on the floor?
Well,
I know you wrote a book about it.
I did. I wrote a book called The Pit. It's available at thepitchicago.com, all about exactly that unique environment, that unique ecosystem. Maria, I know you grew up in it. You're very familiar with it as well. Nothing like an active trading pit in the world. And we thought there would never be again up until, as you said, this news just this week about a brand new Open Outcry trading pit, options pit, suggested for Chicago. We might get it. I just think, Maria, those days are gone, and for the better. I mean, people now can push a button and execute a trade that back in the old days, meaning 15 or 20 years ago, it could take 5 or 10 minutes to complete. So the pit as we know it is gone. It'll always be gone. But that's why I wrote the book and why I think the memories, especially for younger investors who only grew up with electronics, are so unique to finally experience.
Yeah, they need to go watch Trading Places with Aykroyd and Murphy, right? Again, that wasn't Chicago, but... good old days.
It is so different. When I was on the floor of the exchange, there were 5,000 people on the floor. 5 rooms of the New York Stock Exchange, 5,000 people. There are under 500. I mean, there's about 200 people right now. It's pretty incredible.
It's all been replaced by a server in Secaucus, New Jersey, Maria.
Right, exactly.
And the human interaction of people meeting on an exchanging floor, haggling it out, all takes place in cyberspace. And I think that's what makes the color, the emotion, the drama of trading pits so vivid and so unique.
This is a live picture next to you of the New York Stock Exchange right now. That was a live picture, and nobody's there yet.
It's early, but still
God,
no one's
it's
there.
7:30. It's not that early.
Unfortunately, a lot of people that used to be on the floor, they've lost their jobs.
That's right.
A lot of those jobs have gone away.
Yeah.
That's been a loss.
Jonathan,
Replaced
good to see
by
you, sir.
servers.
Yeah,
Yes.
by
Yes.
servers. Yep. Jonathan, good to see you, sir. Thank you.
Thanks,
Jonathan
Maria. Be
Hoenig.
well.
And I